Okay, I want to take a minute here to talk a little bit about subjective viewpoints and confirmation bias. So you can kind of see this pattern that we have here going on, and we can see this support area that's developed here. So right here, part of me wants to buy this going to the long side. I want to buy it going up. We had rejection right here. We have some support here. We're getting close to that area right now. So I would like to buy this going long. So yeah, so let me buy this going long, right? But then I ask myself, why would you do that? Well, because I've got support area here and it's getting rejected and it's going to go up. Why is it going to go up then? That's this next question I ask myself. I just told myself it's going up, but why is it going up? Because it had support, I just said. No, that's not a good enough reason. That's the problem. So it doesn't, does it? The real question is, does it have a proven statistical probability of success that if I buy it here, it's going to go up? And that proven statistical probability of success, is it good enough for me to make money on? Like, is it a 90% success or is it a 60% success where I'm probably going to blow up my account? Like, what is that success? Do I know what that number is? Not just because of what looks like a support level, but because it's hit 1, 2, 3, all this, whatever's back here. All that stuff has to play into it to give me what that is. It can't just be like, based on support levels, because support levels stocks hit support levels differently. They come in like this, they just come down and bounce real hard, then come back. There's different patterns that show up in that support level. Everything has to be equal to be able to get a proven statistical probability of success. So what is that? I don't know what that is. But at the same time, I want to buy this going up because it has to bounce up over here and go up, right? It has to. And that's what we tell ourselves as traders. It has to, so I'm just going to get in. But if I don't have those numbers, then I'm going to probably blow up my account. Trading it's very how do you say it? I don't want to say, it's very risky for sure. But at the same time, it can be simple if it's data based. But when it's emotional based because we think something's going to happen, we want something that's going to happen, all that stuff, then it becomes really difficult, and a lot of people will lose all their money because of that. But if you can make trading, a very analytical thing where it's just data, it's just numbers saying that, 1 + 1 = 2 most of the time kind of thing. And that's what I'm going to trade based on. So that's the key, I think, to success in trading, is being able to get rid of the confirmation bias part of it, to get rid of the subjective viewpoint part of trading, and just focus on the proven statistical probability of success that fits your personality, your lifestyle, and your goals. All those things have to fit in that package, and all of that needs to go into your trade plan that fits all of those things, and then you can plan your trade and trade your plan. So looking at this thing, now I'm thinking, you know what, maybe not, because there's a W or an M pattern developing here. And a lot of times when I see these M patterns, when they break good. So maybe I don't want to be long in this position. Maybe I want to short this position right here, because we're coming to an M pattern and they usually break down. And this is a big win. And I can get in a little head start right here and get in on this M pattern. But why do I feel that way? Because I've seen it happen in the past a bunch of times. Well, how many times? What's the statistics behind that? Was it exactly this kind of setup? Is all things being equal? Can you get statistical data based on what you've seen in the past compared to what you're seeing right now? All those questions. Or do you want to be a gambler and just say, this looks pretty good, I'm going to get in. And then I wonder why I lost $20,000, $50,000, $100,000, whatever it is, because of doing stuff like that, right? Because I didn't have that exact data to go by. I need that 1 + 1 = 2 kind of setup, or else it's not worth trading. It's not worth losing all my money so I can be in the casino. All right, traders. So I just wanted to give that little note to you, kind of something to think about when you're looking at your charts and you're wanting to get into a trade. Maybe ask yourself, why do I want to get into this trade? And then when you start giving yourself answers, ask yourself, is there a statistical proven probability of success that this trade is going to be successful with a statistic that works for me? Right? And then that fits your personal lifestyle and goals, that fits your trading plan. Ask yourself that. And if it doesn't, then be disciplined. Stick to your plan. You planned your trades. You saw how your year was going to work out if you traded that plan. Stick to that plan. And if that plan isn't working, then make a new plan. but stick to your plan. Don't just casino trade and gamble. Like, try to make sure what you're trading, you have the probability on your side. And not because you've seen it a bunch of times, but because you have the data to support your decision. You have the actual numbers to support your decision. Okay, so now let's look at this from a different side. If I have two choices, I'm looking at this trade and I'm saying, you know what? I'm too weak. I don't have that statistical proven probability of success. I'm weak and I'm going to do it anyway. Then the next thing for me is to say, don't be biased in a direction. Just look at it as a trade and then look at it from a risk management standpoint, because really I don't know which way this is going to go. So one thing I would look at doing if I was going to trade this is I would try to buy this as close to the bottom of this as possible. We'll call it risk. Let me go ahead and draw a line on the chart. Let's draw some lines in the chart so you can see more clearly. Oops, I don't want that. All right, so I would try. So this is where I would consider things breaking down right here. We're going to put a red line and say this is game over line. Actually, we'll make it purple. We'll make a purple line. This is the game over line. It's probably not going to go up. But with that said, a lot of times it'll just bust this a little bit and then say, just kidding, and rip, right? So and then we're all suckers who shorted it. So what I would do, if I just couldn't help myself, is I would want to buy in as close to this line as possible. Maybe it's here. Maybe it's down here somewhere. I would buy into the long side, right? Because we're close to the bottom here. And then if we busted this line, I would put my trade in to reverse my position and short this this ticker if it broke this line. But then the question you have to ask yourself is, if you chose just one way, or you chose to do what I call a speed bump, which is where you play it one way expecting to speed bump it the other way. If I set that up, is where would my targets and my stops be? So if I'm going long here, my target would be, somewhere in the top of this channel. I mean, we kind of got a low, a high, a higher low, and we got a higher high. So are we making a higher low right here? Even though it's looks like consolidation, we still do see a little bit of a micro uptrend, right? So then I would jump in here to the long side. I'd put my target somewhere before the high of this, just in case it decided to make a lower high. And then I would get my target somewhere in here. And then my stop would be, I stopped somewhere down in this area here if I was only going to trade this long. But if I was going to speed bump it, then I would be looking to speed bump it right here, reverse my position, looking for a target down here because this is the next low, right? So I would look for a target to retest this low. And that's kind of how I would play this trade. And then if this reversed on me and went back above this area, that's where I would then reverse my trade again to the long side. So I would be doing a lot of over trading if I was going to be trading this on a gambling basis. But I don't. I want to trade this on a statistical proven probability of success. So as tempting as it is to jump in right here to the long side because I'm close to risk, I could speed bump my play and reverse it to the downside, even add to my position so I don't have to go very far to recover my losses and make a bunch of money. And then if my speed bump didn't work and it broke back above this green line, then I would get back in long, because then it's going to go all the way back up here, maybe even break out and make new highs, and I'll make so much money. That's what we think, right? But why? Why is it that? Why am I even thinking like that? So it's casino thinking right there, because nobody really knows. And the only way I can really make money in the market is trading on a proven statistical probability of success that fits my personality, lifestyle, and goals. If you want more information on the way I trade, follow me on my channel. Click that like button, hit subscribe, or jump over to my site, 2020daytrader.com, where all my trading education is free. Everybody, have an awesome day.